Tesla shareholder meeting kicking off moments ago with CEO Elon Musk set to take the stage any second now. Phil LeBeau is here to tell us the most important things to watch. Hey, Phil.
Hey, Melissa. Robin Denholm, who is the chairman of Tesla, is currently talking with shareholders right now at the meeting. We expect to hear from Elon Musk momentarily. The big question is, does he address some of the big topics that are out there right now? And there are really three of them in terms of what people want to hear about from Elon Musk. First of all, what's the latest with autopilot development? Remember, he said just a month and a half ago, hey, we're going to have 1 million robotaxis out on the road by next year. A lot of people gave him criticism for that. Will he talk about that, whether or not that plan's updated, what's going on with the Model Y, and finally, any kind of guidance in terms of Q2 deliveries? Now, he may not say anything at all. You never know with this investor meeting, because sometimes you get a very chatty Elon Musk. Sometimes you don't get much out of Elon Musk. So we're going to hop on to watching this shareholder event. We'll let you know if he says anything that is significant or if it's one of those days where Elon's kind of quiet.
Musk has already commented, though, Phil, on Q2 deliveries, correct? In this sort of the leaked email a couple weeks ago.
Gee, these emails are coming out now.
Come out and help the stock at opportune times. But the email basically said record deliveries, right?
Record deliveries in terms of, and I'm trying to remember exactly if it was for the month of May, but in terms of their cadence and what they're expecting. So we don't know much about where they are as they start the month of June, aside from what we can extrapolate out of that email about record deliveries and whether or not that portends that this is the ramp up that he's been talking about. Remember, we've been down this road before, Melissa, where they indicate that things are improving, that they have deliveries that are ramping up, and then the numbers come out, and it's not what they indicated or what many people extrapolated out of their emails.
All right. Well, if Elon says anything juicy, Phil, keep us posted. Phil LeBeau in Chicago. Well, Tesla stock is rallying this week, but it is still down 35% this year. Our next guest says this action reminds him of another big tech stock that ended up making a monster comeback, Netflix. Joining us now is Eddie Yoon, founder of EddieWouldGrow LLC and the author of Super Consumers, A Simple, Speedy, and Sustainable Path to Superior Growth. So, Eddie, what made you think of Netflix?
Well, back in 2011, Netflix had a very similar problem as Tesla is having now. So they announced a big price increase. They had some changes to the product when they were going to strip out DVDs by mail and streaming. And there was a big reaction. They lost 800,000 subscribers on a base of 24 million. The stock tanked 80%. It took them 2 years to recover. But since then, they've gone from about 20 plus million subscribers to 150 million. And I think what you see is the same phenomenon of kind of irrespective of what the quarter-to-quarter numbers say, that the category itself has a huge tailwind behind it. So just as when I looked at the streaming opportunity back then, what I saw was that the exponential opportunity for streaming writ large was much, much bigger. So regardless of what happened quarter to quarter, and I see the same thing for electric vehicles. It's about 2% of the market now. It probably has a tailwind to get to about 20%. So, and 60% of a brand's growth comes from the category tailwind. And so given that, I think the long-term demand is not really an issue here.
Are there places where your comparison, you believe, sort of falls short? And I'm wondering if Netflix faced the same sort of scrutiny in terms of whether or not demand was there for the product that Tesla faces, or the concern about cash burn, that a huge concern that Tesla faces right now?
Yeah, no, I think that clearly streaming and cars, one would think that they're wildly different categories. But at the same time, if you actually remember back to what Netflix was like 2011, original content was not there. Emmys and awards were not there just yet, right? It was kind of B and C level content that they were streaming, and it was kind of a subpar offering there. They continually improved the product. They were able to take pricing, and that's what I felt like was a virtuous cycle that I see there too. And that importantly, the part about Netflix that I thought was really quite interesting was who they were competing against. They were actually competing against boredom. So you work for 8 hours, you sleep for 8 hours, you got a whole other set of...
That's an easy win for Netflix.
Easy win for that. And that for Tesla, the same phenomenon is going on is their competition is really against compromise, because you kind of have, I've studied consumers for 20 years. You have two types of consumers when it comes to the car category: people who buy fun cars and people who buy functional cars. And never the two should ever mix beforehand. Now with Tesla, you don't have to choose between what's going on there. And what I'm actually seeing is that from my data, the bulk of people who are buying Teslas today are not necessarily luxury car owners before. Some of them are Prius owners. That's been going up quite a bit. And actually, what you see is that Prius sales have dropped precipitously in the last 4 years. They were about 180,000 in terms of annual sales in the U.S. 4 years ago. Now they're about half that. And if you actually calculate the sum total loss that Prius has had over that 4-year time period, magically and coincidentally, it's the same amount that Tesla has grown by. So you got that demand that's out there. You have the secondary demand, which is that, by my analysis, that the majority of people who own Honda Accords and Toyota Camrys want a Tesla and can afford to pay either a $60,000 upfront cash payment and or a $1,000 per month monthly payment. I mean, the vast majority of cars are leased or financed. And so the demand is coming from unexpected places, and that's the part that people are missing.
So just to bottom line it, obviously, you think that Tesla may have a rough year or 2 years ahead, but then eventually to the moon?
Yeah, I mean,
as we saw with Netflix.
When you judge a growing category that's being created on a quarter-to-quarter basis, it's kind of like driving a car through the lens of a microscope looking backwards, right? I mean, it's not really helpful. When you look at, say, all of our children and their grandchildren, will there be 10x more or a tenth fewer electric cars? It's going to be the former answer. And that, with that in mind, that tailwind is pretty insurmountable there.
Eddie, great to have you with us. Hope you come by again soon.
Thank you very much.
Eddie Yoon. Pete Najarian, what do you think of Eddie's analysis?
You know, I think a lot of it makes sense. We had a chance to talk earlier, and we were talking about a lot of the different variables that are going on here and the comparisons with Netflix as well. And Netflix is one of those names where I continue to be bullish on. Tesla is a crazy name that we all know. It's almost impossible to get your arms around because of all the tweets, everything else that's going on there. But I will tell you this, there was some monster buying. Dan and I are always looking at the options world. It's very, very clear. June 4th, 10,000 of the August 250 calls were bought for over $2. That's a real trade. That was somebody putting down money saying, you know what, there is some form of recovery. Stock was trading 180 mil. Now here it is up almost $30 from that point. So I'm looking at this. I bought along with those calls. This is a trade. This is not something where I think long term, I think Tesla's going to scream right back to 400. But I do think this thing gets in those ranges.
Right.
Guy talks about the ranges all the time where support is. I think right now we're on this upward swing. I think we do hit 250.
You had mentioned that trade before. It's saying that it was very unusual to see this sort of action.
Well, no, that was a different trade. But, you know, listen, I'll just say this. That was a really succinct kind of comparison. I don't think it makes a whole heck of a lot of sense to me. I mean, if you think about the pie that the EVs have grown over the last 4 years, I would be very skeptical if Tesla has picked up the Prius buyer. On the average Prius is like 27 grand or something like that. Tesla's lowest end is this new Model 3 that we know comes at like 55 G's or something like that. So obviously there's more.
But those numbers were pretty clear. I mean,
no, they're not. The pie has grown, and so Prius is selling less. But how many is Chevy Bolt selling more? I mean, I'm just saying this is not a great reflection. I just don't think that you're having a Prius buyer going up and buying a Model S or a Model X or a 3.
So here's the big difference between Netflix and Tesla, as I see it. So back in 2011, Netflix had a market cap of $10 billion. They had $200 million of debt, and they had total debt to EBITDA of 0.5. Right now, you have Tesla at about $38 billion. They've got almost $12 billion of debt, and the total debt to EBITDA is almost 8.0. So Netflix was able to make a mistake here and there. Tesla can't afford to make a mistake. I mean, they got to hit a home run every time they step up to the plate.